recording Miss Healy. So this is thousands. This is in thousands. So what happens, and this one I'm only explaining for this question. During conversion, the books of the partnership must be done what? Closed off. Closing the books means close the asset accounts, close the liabilities accounts. So in the ledger, assets normally have which entry? Assets in the on which side of the ledger? Always. On the? Huh? Assets that on which side of the ledger? Debit or credit? Debit. So when we are closing, you credit the asset account, then you debit which account? Realization. So, sorry, all the assets are closed by debiting realization account at their net book value. So debit all the assets because you are crediting the assets to close them. The same as liabilities. To close off liabilities, because liabilities are credit in the ledger, debit liability, then credit which account? Realization. So what I want you to know is that realization will record all the net book value of the assets and is credited with the book value of what? Liabilities. Book value, not taken over. You know, we have two values, the taken over values and the book values. So you bring them here at net book value. Net book value is after subtracting the deviation, if any. So let's check. Land and buildings. Land and buildings. Land and buildings, what was the cost? 123, 500 minus 20 and 50. 20 and 50. So how much? How much is the book value? $103? $103,350. $103,350. Good. Then motor vehicles. Motor vehicles 8,600 minus 54,600. How much is that? 26,000. Equipments. Equipment 7,200 minus 24,400. How much is that? 45? 800. We have F and F. 52 minus 18,500. What do you get? 33,500. Investments. 44,800. Goodwill. So this goodwill, they said it should be written off. So if written off means it will not be acquired. We assessed our own. So goodwill 26. Inventories. Even current assets. Inventories 31,200. Receivables 25,400. Payables, liabilities, you will have to credit. So payables 62,400. Bank overdraft 17,550. Accrued expenses, 4,000. There are some two more. Finish that one first, then I tell you which ones. Two, when an asset has been taken over, the taken over value, that is in quotes the amount which has been realized. Unaona hizi tumeweka on the credit is again, is like again to them. When someone takes your liabilities, these liabilities were acquired, so zitakuwa transferred. Mtu akikuchukulia madeni, unacheka kama unalia. Si unafurahia. So two things. One, an asset taken over is like an income to them. So you come and say it will go to the partner's capital account. There was investment taken over. Check somewhere. Investment taken over. It will affect their capital account. It will affect their capital accounts later. It was mentioned in note number, which one? Note 2, bullet 1. Investment comprised equity investment, which partners had acquired jointly. Each partner was to take over a portion of the investment equivalent to profit share. The investment had a market value of how much? 50. So that 50, you bring it here. Also, the purchase consideration, the amount we received as purchase consideration, you credit here because it's like an income in quotes. So purchase consideration, they agreed at how much? Was it 250? Yes, 250. That is how we prepare realization. Can you balance? Balance but not post. Just tell me the difference is how much and on which side. That is how realization is prepared. You just debit it with all the assets, credit, liabilities. There's nothing serious. Just give me the balancing figure. Thou shall not be serious because these things are easy. Online balance, Kaukona balance post, the difference. 47,900. 47,900, unanimously agreed. Which side? This side, eh? So that 47,900, you will share to the partners in their capital account. So whether it is a loss or gain on realization, that's again actually. You don't care whether it's a gain or loss. You just come and watch the this side, you will still share. So whichever side it is, you share to the partners. So you say here partners, capital accounts. Partners capital accounts. Walikuwa wanaita nani? Chanda? Ni Chanda? Pete, Kidole. How are they sharing profits? What was the sharing ratio? So 2/5, 2/5, 1/5 times. We have said 47,900. So can you share? Share. Bas, so kila mtu anaenda na kapi. $19,160. So 19,160, 19,160. Finally, 95. Total was coming to 383. 950. Let's go to the next. We are still in Roman 1. We are still in Roman 1. Roman 1, they said realization. The next one was which one? Partners, capital account. Partners, capital account. Partners, capital accounts. You tell me the balance brought down. Current account. Ile balances tulipata kwa current account. The one we say to capital. So balance brought down. I want to fill that in. Then current account. How much is the balance brought down? For each one of them. 58. Capital. Capital. What do you think? So 58,500. See capital accounts. I've said capital account balances. Whoever is using iPhone, please use your name. So please use your name. See balances with 5,500 capital. Look, the one you are saying is which one? You know, I'm going to get what you are saying. So this is 58,500. 37,000. 31,500. Current accounts. Now read for me the current accounts which are making you happy. Do read them for me. 48,970. 45,520. 30. 610. Those are the balances we got in the current accounts. Sure. Then realization. Realization, you got something. So realization. From realization 19,160, 19,160, 95,80. Then these people, yes. 5,500. Angalia neighbor kama umeiona. Hatujaitumia anywhere, hatujaigusa somewhere. Have you seen it? Capital balances. You have seen it, right? So these partners, these are what they're supposed to claim as the partnership is being converted. However, there are some, they took an investment of the company. You remember there is investment which was taken over? That one should reduce whatever they are claiming. So investment taken over. Investment taken over. Investment taken over. It was 50. How are they to share it? 2:2:1. So investment, the ratio is 2:2:1, and it was 50. So that is 20, 20, 10. Yes, 20, 20, 10. You know, capital account with Danganya. You know why you can't lie? The balancing figure here, when you add this and this and this, should always tally with the purchase consideration, because that is the balance they are requesting to be paid. So lazima itoshanake na ile what they have been paid as purchase consideration, which is 250. So the balancing figure is the ordinary shares. And ordinary shares to the new company is called Chapek. So that is your balancing figure. So balancing figure means add the credits, subtract the debits, then give me that value, and the value you get, this one here, this one here, this one here. When you add this and this and this, should be 250. So let me sort out these people. Paris, Nyaboke, and Mwangi. They will contact reception kidogo. I also check with them kindly.
Right.
Construction contract. Video in the definition. Let's go show. Before your exam,
So I hope hao wamesaidiwa hao online. How much is this one? Oh, mumeadd zinakuja 250.
yes.
Then that's accurate. How much? 106.
630.
81,
680.
This one?
680.
And
690.
61, 6. Let's go to the next required and then someone has an issue. So the next required is which one? Chapeki. Sio pia imeulizwa. Chapeki limited account. That is easy. Who is Chapeki to this partnership? So we said buyers. So buyers. is always on a simple account to prepare. How much is the total purchase consideration? 200 and what? 50. So you invoice them. Hawa ni kama clients wetu wananunua kampuni, so you invoice 250. The one which is appearing in realization account. So realization 250. That is the purchase consideration. Purchase consideration 250. Have they settled? Yes, they have settled. They have settled by giving out ordinary shares. This one. So there are these shares, this, and this. So ordinary shares, they settled that by giving shares. Chanda was given 106,630. Pete was given 81,680. Kidole was given 61,690. That is 250, 250. As simple as that. So that is when we are done with Roman 1 of that question. Next, required. So andika hapo Chapeki Limited. So Chapeki Limited. Opening. No. Opening statement of financial what? Position. As at ile vitabu zilikuwa lini? The partnership books was at that is September. So this will be 1st October 2017. So I have 2 columns. Shillings are in thousands. So have that so that we prepare the balance sheet. Non-current assets, so what you do, you record the taken over values, not book values. Book values were written off in the realization. So taken over values. Master the process. So non-current assets. Which ones are you seeing? The taken over. Land and buildings was taken over as what value? 115, not 2 bullet 2. 115. Motor vehicles 25. 500. Office equipment. Office equipment. 43. 500. F&F. 29. Then there was goodwill. You remember the goodwill we calculated yesterday?
Yes.
Bring it here. Goodwill. How much was the goodwill?
65.
65. Give me the total non-current assets. So they go up. Written off. We wrote off the one which was in the books. Yes, but on acquisition we assessed our own. The company assessed their own goodwill. So the other goodwill which was in the trial balance, we wrote off in the realization. So get the total non-current assets. How much is the total non-current assets? You are getting 279. 545. Current assets. Current assets. Current assets. Current assets. Which ones are you seeing? What's an inventory? Inventory. Inventories we're gonna issue. Inventories, what did they say? Check in that note too. What did they say about inventories? Book value less 5%, meaning it was taken over at what percentage? 95. However, subject yourself to note number 3. Check note 3. Additional information number 3. Upon incorporation, the new company issued new debentures at par, carrying an interest at what rate? 14% per annum. Remember, the debenture is a loan. The cash proceeds from the issue amounting to 50 million were used to purchase additional stock of raw materials worth 15 million. So raw materials is part of inventories. Yes. So what you do for inventories, take 95% times what was the book value of inventories? 31 plus that 15. They bought additional stock of 15. So plus 15. So get 95, then what you get top up 15. Tell me how much? $44? 44, 640. 44, 640. Receivables. Receivables was taken over less 2.5. So it means it was taken over at what percentage? 97.5. So receivables in the books 25,400. So take 25,400 by 97.5. How much? 24. Then something is telling my head here. The cash book. The cash book. So can we have a reconciliation of the cash book? Above are working outside. The cash book. Or the bank, whichever. There is an issue. Now, cash book is an issue. So have cash book, stroke bank. Cash book, stroke bank. How much was the balance brought down, which was acquired? When you acquire bank overdrafts, no. The balance was an overdraft. So balance brought down, which was acquired, was an OD. OD is the overdraft of how much? Overdraft was 17. Are you seeing the 17,550? Yes, where can you apple? Then these people, they got a loan by giving out the ventures. You know the venture certificates too. So they give out the certificates and they got a loan. Loan was how much? How much was the total value of the debentures? 50. So you debit the cash book, then you credit loan account. So 14% debentures, they got money worth 50. Then that 50, Eburin, what they utilized that 50 for in that note 3? How did they utilize the 50? The cash flow was additional stock for how much? 15. So inventories, they purchased stock. So you credit cash book 15. Then accrued expenses were settled in full. So accrued expenses were also settled in full. It was how much? 4. Question. So how much is the balance in that cash book? Balance carried down. Good. So cash book is remaining with how much? 13. 13. Total current assets. $82, 855. Total assets. Total assets. 362. Thank you. Equity and liabilities. Let me present it the other side. So down there, write equity and liabilities. Equity and liabilities. Ordinary share capital. Ordinary share capital. It was 200 and what? The total shares given to the partners, it was 250. Then, I couldn't remember the profit or anything. Non-current liabilities, there was the debentures, 14% debentures. Debenture is a loan. Debenture was how much? 50. Current liabilities, there were three. One, overdraft. So overdraft has been credited to the cash flow. So that one has been factored. Accrued expenses was also settled. So we are only remaining with payables. Okay. Payables is how much? I will check because it was taken over at book value. So just give me the book value of payables. 62. 400. It is balanced. Total equity and liabilities. It is balanced with the total assets. Total equity and liabilities. What do you get? 362. Kisha. Nani yako na swali? November 2019. November 2019. Question 1B. November 2019, question 1B. Oh, you're the one. Why are you playing with? November 2018, question 1B. November 2019, question 1B. Umeipata? Wanajiita nani? Chanda, pete na kidole tena. Tenda. Oh. Haya. Kila mtu atafute hiyo swali. Because learning curve. What is learning curve? Your learning curve has increased, so I'll increase speed up. You already know what is happening. I hope now everyone is there. Sure. Let's read. Now that everyone is there. What does it say? Chanda, Petra, and Tender have been partners in a business for many years, sharing profits and losses in the ratio of 2:1 respectively. On 30th of June 2019, the partners agreed to convert their business into that of a limited company to be named Chapeto. The trial balance extracted from the records of the partners is, as always can see, property at cost is 60, but building is 50, meaning land is 10. So, plant and equipment, motor vehicle, furniture and fixtures, provision for depreciation, as you guys can see, net profit for the year, trade receivables and payables, inventory, cash, fixed capital accounts, bank, current account drawings. Additional information, the property, plant and equipment in the partnership were being depreciated, as you guys can see. Depreciation for the year had not been provided for. That is a serious statement, had not, meaning the net profit is not accurate. Is that true? See, depreciation is an expense. So they are saying had not been provided. So if they have not provided, it means the profit is not accurate. You have to reduce that profit with what? Depreciation, before even you appropriate it off. Number two, the partners were entitled to interest on their fixed capital balance at the rate of 10%. No salaries were paid. The tangible and current assets were to be transferred to the new company at their fair values, as you guys can see. The current assets and liabilities were taken over by the new company at their book values. The purchase consideration amounted to how much? 10 million, and was settled by the new company through the issue of ordinary shares of shillings 10 to the partners in satisfaction of the amount due to them upon conversion. Required realization account, partners capital accounts, opening statement of financial position. Yes, sir. Moja kwanza. What do they want? Realization, partners, capital accounts. Why don't you end the normal way? But in exam, can I show you how your style naenda? That is a very long process for examining. Can I show you how you do this thing in exam? Yes. Exam style. Yes. Exam style. Exam style, tutaki kuanza sijui na working, sijui where, inakuwa tu. Wacha uone. Wait and see. So kama ni exam unaanza na required straight. Things which are disturbing you pia unachana na. Let's start with the realization account. Straight. Though there are 3 workings to be done. Adjustment to profit. So you adjust profit, current account, goodwill. Those 3. Then you answer the question. But God will bring them as we proceed. Yeah, so we will do them simultaneously ama concurrently. What wakizungu simultaneously, concurrently ama hand in hand. Let's start with the realization account. Realization account. So when you go to exam, start with mambo ya workings. Do them as they arise. So start with the required straight. You pause kujiaja kufurahisha unaacha. So you know what is happening. Come on. We are serious. Yes. So, I have one. Shilling 5,000. My students are very serious people who are aware that realization is debited with assets at book value. So, no. Debited with the assets at book values, credited with what? Liabilities, including purchase consideration. So the assets, the only issue, assets take the cost minus depreciation hapo kwa balance. Then remember, kuna ingine for this year they have not done what? Charged. So you charge for this year, you subtract two depreciation. There is the accumulated in the trial balance, and there is one which they have not charged for the year. Are we good? Let's start from top down. Property. So property, what is the cost of property? 360. So 60 minus, how much was the accumulated depreciation in the trial balance, the one they're calling provision for depreciation on buildings? 5. Then they are saying for this year not being charged, so can you charge and we subtract? So what was the depreciation? What is the depreciation on buildings? 2%. Eh? So take 2% of 50. Building, the cost of building is 50. So take 2% of 50. That is one. 50,000 by 2%. How many you 2% of 50? 1,000. So 60 minus 5 minus 1. That is 6. 54. 54. Is that 54? Nini naleta shida, naona watu wakistaga staga. 60 is for the whole, including land. Land is not depreciated. What is to be depreciated is buildings, which has a cost of 50. So unaelewa? Sini yote, see, property, iko na land and buildings. But we know back in our head what is being depreciated is which one? Buildings. See, it makes sense. Buildings is inside the property, and that is what is being depreciated. Between your Cynthia has legs and has a heart. Between your heart and legs, which one is being depreciated? Huh? The heart. You're saying your heart is big. Well, next. I write a note anyway. P&A, plant and equipment. What is the cost? 25. What was the accumulated depreciation? 13. Minus. Reducing. Reducing means on net book values. You know? So it's supposed to be actually 25 minus 13. Then you multiply by 12 and a half. Reducing means you first of all reduce is when you charge. So it should be what I just indicated there. Minus 12.5% in bracket 25 minus 13. 12 minus 13 is 12. 12.5% of 12. 1,500. So we talk like 12 minus 1,500, 10,500. 10,500. Thou shalt not copy. For the copiers, shall never go far. Don't copy. Make sure umeona kila kitu. Kama uone kitu na copy, just tell me. I'll clarify. That's why I'm here. No big deal. They will mention. But the only thing they can, the worst part they can use to tell you on cost, and the cost is straight line. Or they refuse to tell you reducing, they say your net book value. That is still reducing. They cannot keep quiet. Examiner, piga kelele. I adjust the light. The light cannot be adjusted, Najma. Ramla, I know the issue is on the 12 this one here. Reducing balance means you charge on net book value. What is net book value? Cost minus the accumulated depreciation. So we were to take 25 minus 13 first is when you depreciate. If it was straight line, you just take 12.5% of 25. So Ramla, I hope you have understood. Motor vehicles, 12 minus 4,800 minus, they want us to charge at what rate? 20. Straight line. So 20 is on cost. So 12 of 20% of 12. So it costs me 12. So 20% of this 12. So toa kila kitu. 20% of 12 is 2,400. 2,472. 48. So this is 48. F and F 4 minus 16 minus what percentage? 10% straight line. So 10% of the 4. Sure. 10% of 4 is 400. 400 plus 16 is 2,000. 2,000 from 4 is 2. True. Yes. Pass. Hiyo ndio ilikuwa time waster. Now we want to do it properly. Which one? 48. 48. Nani?
We're taking 12 minus
48
gives us
minus D. Nakupea ngapi? 20% of 12 is giving you how much?
24.
Umeona? Hapo ulikuwa umelala kidogo. Tumeamka. So let's go to these other assets, the current ones. Trade receivables. For receivables is how much? 18,200. Inventory 25,300. Don't copy. Cash at bank, how much? 81,20. That is all for the assets. We are remaining with liabilities the other side. So liabilities, we have, are you seeing payables? How about receivables? How much? 14,700. Are you seeing bank loan? Are you seeing bank loan? 18,000. Purchase consideration. Purchase consideration, which was paid by Cha. Chapete ndio walilipa 110. Kwisha, hakuna English hapo. Just balance the accounts, then you share to them. Imagine hapo ushapata hizo tips zote. 6 months. Instead ya kuanzia ile story ya 1940s. So I always advocate to go to the real thing. Hata ukiwa na shida, ukiwa na shida, juu hakuna binadamu hana shida. Ama kuna mtu hana shida hapo? Everyone has a problem. Go to God direct. Straight. Si ati unapita kando kando, unaambia watu, unajua, give me advice. Nobody will give you advice. You go to God direct. And for your information, God listens to everyone. True, false. So unaenda direct. So instead ya hii kutakataka ati yo adija kuja hapa direct, utafika mtihani through that. Because they don't mark workings, they only mark presentation of what is required. So workings must be minimized as you can. So add this, subtract. Now like this side seems to be higher. Add this, subtract, then we share. More than you can answer. So balancing figure online. Nani amepata hiyo balance? I'm told balancing figure is 19,780. Confirm what it came from one person online. Anybody online getting 19,780? 19,780. Kindly confirm what is your online. Your online is on your network connectivity. Done, amesema it is okay. So is this side, eh? So share the partners. So two partners, capital accounts, Chanda, Pete, Tenda. What was the ratio? 2 to 1. So 2 over 5, 2 over 5, 1 over 5 times. You said 19,780. 19,780. 19,780. Give me the answers. 7912, 7912. Balance times 2 minus 19,780. 39. 56. 142,700. Was that the total?
Yes.
How many marks? No, promise me. Ikileta what a letter. Will you get that one? Simulata. 6 marks in it. 6 marks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Oh. Any 6 at 1. You easy fight Makiwa. This balance to capital account should not be marked. Balance in figure should not be marked. Any 6 correct entries. So kila mtu anajua zenye atapata bila stress. Let's go to the next required. No, have you seen how you can do that thing without many workings? Though, then katuka hizo workings. What we are doing is just postponing our problems, but I'd rather you do that in exam so that even if time is not there, you have done something. Because imagine unasikia 10 minutes remaining. Na hiyo partnership ya hujafanya. Na unajua ukienda presentation you can na umeanza na workings. Will you manage? But this one you can present within that duration. Na hujatoka bure. So I recommend that. Let's go to the next. Check next. Awe chora tutaenda tu na kichwa ngumu hapo kwa partners capital account. Zenye ziko tunaacha kwanza. Partners capital accounts, draw them for the 3. Draw for the 3. Draw for the 3. So partners capital accounts. Hiyo tunafanya lakini hatumaliza. Miguu yetu itashikwa mahali because of current accounts. Ndio. Hapo hatuwezi maliza kama hii like realization. But now the best thing you do, unafanya hata ukiota hivyo, you know your school some marks. Then you go and do the workings, then you insert. So right there, partners capital accounts. Now that is the exam style. So, hapa ningetumia partners capital accounts. Na kwa mpaka exam anashangaa kwani mtu alikuwa na workings, kwa nini yeye hana workings? Na kuna answers. Ni kwa alliance. Unajua kuna alliance. Alliance ya CBA. Alliance inakuwa nini? So wanajiita nani? Chana, pete, kilo. Penda, pete, chana. So even I want you to know those things often. What is happening? So unakuja hapa, nasema balance brought down. Of course, capital balances. After that, letting tuko nazo realization. No. After that, current what? Current accounts. Current accounts. Hakukuwa na mambo ya asset taken over. So nothing will be this side. Mpaka balancing figure unaandika ordinary shares. Ordinary shares to where? To chap. Hivyo. Lakini usiweze question mark. Hivyo. That is how that thing will be presented. So now, you capture the ones you can see first. Vitu vya uoni unaacha kwanza. So balance brought down, check them in the trial balance. Fixed capital 30, 20, 10. 30, 20, 10. Right? Realizations tumeshapata figures pale. 79, 12, 79, 12. So 79, 12, 79, 12, 39, 50, 6. The current account peke yake yabaki na kubaza hiyo story. Hiyo current account page atujua. So now, wachana nayo. Tunaenda statement of financial position. We finish that one, then we come back. Hiyo tu kibaki. Because balance sheet, nothing is restricting me. I know that when I add this, and this, I should get 110. Sindio? So tukienda huko ordinary 110. Hiyo ninaweka huko. There we go. Maisha imekuwa rahisi. I want to present it there. Hiyo ni exam style. Now that is not teaching style. Hiyo ni exam style. That's the best to go. So start. Chape, chap. So chap, chape, chap. Here the opening. Opening statement. Why are they calling it opening? Because it has just formed. As at when? 1st July 2019. Are you ready? Be ready so that we start all together.
Unajua tunakuanga na a student sitting for exam and we have the student. So wewe unataka kuwa mgani? The student. The student anatumianga hii style. A student anaenda mpaka akona colors. Anaandika pole pole mpaka na decorate. A student. Non-current assets, story baadaye. Let's check non-current assets. I want 100% pass in this class. Non-current assets, which ones? The taken over value, the taken over, not book value anymore. In the new company, we talk of the taken over values, right? Note number 2, no.
3.
Note number 3, property. Property, how much? 37. Teremsha kabisa, ukipata mteremko. Kanyaga mimi mafuta kabisa. Tuende tukwambie huko mbele. Plant and equipment 16. Motor vehicles 95. F&F 35. No. Then unakuwa na goodwill. Sure. You know we have skipped that one. Goodwill. Better hapa. God will provide. Better. Wakati nenda unaenda hapa. Utapita tu bado. Hata utapata hiyo swali yote because marks are many. You have so many ticks, so utapita nayo. Current assets, but here we are coming back. Current assets. Current assets are which ones? What did they say? Read note 4. Were taken over by the new company at their book. So the way they are appearing in the trial balance. So we have inventories. So look, inventories, how much? 25, 300. Receivables, how much? 18,200. Cash, 81, nothing. Sure, nothing. Yes. Huh? 51,620. Total assets. That is not even our concern. Hata kuna mtu ana makini. Ni nini tu mnataka kujua kama swali ni bala. Na kwa mjani hii jambo liko bala. Equity and liabilities. Tumesema sisi ni a student ama the student. Yes, the student ni mtu kama huyu. Mtu ametoka Alliance ndio style yake kupita mtihani. Pass. Ordinary share capital. Unaona hiyo compensation? Hiyo ndio shares wanaenda nayo huko. How much? 110. Weka hapo. Kulikuwa na bank loan, sio? There was bank loan which was taken. Non-current liabilities, bank loan. Bank loan is how much? 80,000. Back up. Current liabilities. Customers should know who you are. Wake up. Payables. Current liabilities. Payables, how much? 14,700. Is there another one? Here. Okay. So then mwisho 14,700. Then give me total total equity and liabilities. Total equity and liabilities will be how much? Add everything. 142. 142. 142,700. Still, a student, no, the student anaweza pata goodwill. Sindio? So unaweka hapa, weka hapa 142,700, tafuta goodwill. You subtract everything, then you fix goodwill. Hiyo ni mtihani. Mtihani una fix na unafunga macho unasoma. But hapa nita confirm. Exam don't waste your time confirming. Eh? So, can you get for me the value of goodwill? 142,700 minus 57, that is 90 by 16, that is 10, 6, 50, 80. Can somebody confirm that?
50, 80.
It has been confirmed by honorable members that goodwill is 50 what? 80. So in exam, we confirm because what marks ngapi? Apana, the old balance sheet, they're giving how many marks? 4. 1 in 4. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Hata wakikasirika ya mwisho itakuwa any 8 and a half. So that goodwill is wasting your time. Because we have to confirm, by the way. Let's confirm. And the confirmation is easy. Do you know how you confirm? All the assets taken over minus liabilities taken over, then you get it out of the purchase consideration. The assets taken over, can you add this one? Roger. See the 142,700 minus goodwill. The goodwill peke yake haiko ndio inatafutwa. Toa hii goodwill. So 142,700 minus 50,80. You got the total assets acquired. Take 142,700 minus goodwill. 137,620 minus current liabilities. Not current liabilities only, but all the liabilities taken over. So minus 18, minus 18, minus the current liabilities, pale payables 14,700. Then what you get, take away from the purchase consideration, which is 110. What?
58.
You take the purchase consideration minus net assets. And the net assets, you say all the assets taken over minus what? Liabilities. So you can connect. Connect where? How do we calculate goodwill? What is the formula? What is the purchase consideration? 110. Minus what? And what is the net assets? All the assets taken over. So all the assets taken over should be, you know, it's not one for, you know, this one includes goodwill. Now goodwill is what we are looking for. So you exclude, you add all this excluding goodwill. You are getting 137 something. Minus liabilities. Liabilities be loan and payables. Those are serious people. So balance sheet tumemaliza. What is remaining? CDE partners capital account. Hata unaweza link kwa mtihani. Ushapata hiyo swali yote. But we can confirm. It's going to take our time. We just leave it. Bora balance sheet balance. No, let's try. We don't have any option, by the way. We have to do it. No, let's do it. We have no option. No, you know, come on the exam. For example, because now you have 4 marks. What I mark 1, 2, 3, 4, 5, 6, 7, 8, 9. But I say my 4 at 1. Ushapata hiyo utapata yote. Capital account hapo kwenye imefika uko na all marks. So kama ni exam washana hiyo enda ufanye hiyo swali nyingine. But here we have to finish. That is not the style of teaching. Ya kwanza vitu zikipanga. Alafu unajua utasahau hiyo siku tulifanya kitu kama hii. What was happening this day? Alafu zaidi ni mtu alifotokopi kitabu yako anakuuliza kwani hakumaliza. Ati saa zingine anakuanga hivyo. So let's adjust the net profit. Adjusted net profit. After you adjusted net profit, I can do it very fast. In a way that you wouldn't even realize the pain. The profit, you take the net profit, then you adjust the depreciation. Otherwise, no depreciation. Because they said depreciation have not been provided. So reported net profit, reported NP, they reported how much in the trial balance?
28,800.
28,800. Less depreciation. Can you be able to provide me with all the depreciations as lump sum? If we want to buildings, it was how much? That one I remember it was 1. So building was 1. Check your realization. You can pick them nicely from realization. Buildings was 1. The 2% of 50. So plant and equipment, what did we get? Ile ya reducing ilikuwa 25 minus 13, 12 times 12.5. Was it 48? The 25 minus 13 was 12. Then we multiplied by 12.5. It was coming to 1,500. 15 plus motor vehicle is the one which was 48. Motor vehicle was 48 plus furniture was 400. Kusha. Add all these depreciations. This is 25. That is 73. That is 77. 77. Get the remaining profits. Yes, please. Maybe it's not figures. Only the hour. Must it depend about the figures? Depreciation for motor vehicle. Motor vehicle. 20% of 12,000. That is 24. But copiers. True, this is 24. Anybody who has copied, I'm going to neighbor one here. I'm going to give it 25, 49, 53. I look like it, yes. After you get it, yes. This was 24. The 20% of 12. But Miss no problem. How much is that? 23? 23.5. Let's share that cost. No, there was interest on what? Well, if one interest on capital. So interest on capital at the rate of so Chanda, Pete, Tender. 10%, 10%, 10% times. Their fixed capital 30, 20, 10. 30, 20, 10. 3, 2, 1. 3, 6, 17 something. Answer 17. Interest on capital. We only had interest on drawing. So interest on capital ndio wanalipwa. Si wao wanalipwa. Lazima tumalize. So give me the answers. When you are on njaa wanipatie answers. 17.5. I have profit share. Hata hii tulikuwa time wasted. Profit share. Chanda. Pete. Kidole. No. Tender. How are they sharing profits? 2, 2, 1. So 2 over 5, 2 over 5, 1 over 5. So 2 over 5 times that. 2 over 5 is just 0.4. Just take 17.5 times 0.4. Huh? 7. So 7, 7, 14, 3, 5. True, false. Sasa hiyo ukishakuwa nayo current account is nothing. I think maximum 5 minutes tutakuwa tumaliza. Can I come up with partners current accounts? Chora partners current accounts where we are going to adjust all this. Partners current accounts. Chanda, pete, tenda. Tenda, pete, chanda. Are you ready? Balance brought down. Balance brought down 42. Here. Utafika hapo. Kulala. Unajua unalala na ujui unalala. Unaangalia figa moja hivi. Na uso. Sleeping in this guy, right? Balance brought down is that. Bring all those things in the appropriation. Interest on capital. 3, 2, 1. Profit share. 7, 7, 3, 5. Was there drawings? Drawings. Drawings for how much? 15, 80, 11, 70, 710. Push up to capital. So can you balance? Bio. Hata tuka na wacha hapo. Lakini ngoja mkamaliza kweli. I'm saying yeah. Kama tufanye hivi to save time, ladies physical.
Can you balance this? This plus this minus here, give me the figure. Ladies online, P, this plus this, minus this, nipatie figure. Gents physical, mfanye T, that plus that minus that. Gents online, you confirm all of them randomly. So you need the auditors. So everyone able to save time. Here you go. See the balancing figure.
Yeah.
This one.
Yes.
6130. And P was online. Online P ladies. Ladies online with P. Those who are confirming online, you say all of them are okay, or we have detected. In our opinion, we have detected that there is an issue. So online they are saying 11,390. Confirm 11,390. Whoever was confirming are all okay, because you should copy at your own risk. Yes, it is confirmed. So now, turudi kwa capital account. Nakumbuka capital account which we have left. Yeah? Alright, so let us figure out. 12,7, 11,390, 61 times. Go back to your capital account, bring those current account balances there. So hii account ndio kusema ukweli. So again, tuvenye tumeenda. Ladies physical, add for me C, one capital. Ladies online T, gents online T, no, gents physical T, gents online, you confirm. Then when we will add this plus this plus this, if you put 110, we are very much accurate. So C. So you committed a kwenda kufanya hiyo kitu. Umesikia? Whoever refused to hear, rakiona. Unashtuka mtu ulikuwa unaona haizi pita ati alipita, kwani atapita aje? Hivyo tu alikuwa don't care. Unajua people who don't care ndio wanapita. Usikuwe perfectionist, sasa paka. Kama kuna mwingine section 1. Alikuwa anapeana example, mpaka anasema in the paper. Yes, where my father is working, they normally reconcile. I'm told my online T is 39,302. Online in online ladies. Online ladies they P 39,302. Physical ladies 50. This is your 110. Gents 20. 0.6. Can you confirm by adding the 3? This plus that. Najua akija kwenye viko sawa hata before aje. You at least tupotee. Because so that is it. But wait. Tulifanya hiyo capital account, we left it hanging with current account. One thing cannot make you do all those. Sindio? Please. Mimi nimefanya tu at least. Kwa nini nimefanya? Ni useme si hata hivyo ndio jina yangu isiharibike. Ulifunza jambo gani? Ule afanyangi capital maliza. So in exam that one thing cannot make you to waste like 20 minutes, sindio? 20 minutes is enough to do another question. So una fix people, unakuwa smart, then people. Otherwise, that is it. I'm not giving you assignment. Though at the promise we are doing 5 questions in partnership. Those are 2, 3 remaining. So no assignment. The 2 we have done is the assignment. Go through those questions over the weekend. See you next time. Thank you. Let's meet next week, God willing.